Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond. It is 4:59 in the a.m. Eastern Standard Time. It is the 11th of July. I don't know why I look over my shoulder. Let's begin with the news. Last night, or yesterday I should say, we had the president who announced another round of tariffs on the Chinese. The market subsequently sold off. So I should say in the after hours, the futures market was down about 1%. By the time I closed my eyes last night, it had bounced back a little bit. We're back down to the 1% level. We were lower. We bounced back yet again. Let's take a look at the charts. Members, what we're going to do is we're going to go over the pre-market activity. Then we're going to go over your stock chart request, and then we're going to do a brief morning update where we're going to discuss strategy, how we're going to handle today's price action, what to expect, what our milestones will be. Meaning, do we gap lower and stay lower and press lower the entire day, or do we bounce back? So there are certain strategies that we will employ depending upon what the market does. Let's kick things off with S&P 500. Okay, so the market sent us a signal yesterday on this 4-hour chart that something was amiss. Well, it's not even the 4-hour chart per se. Volume has been weak, right? You could blame it on the summer doldrums, fine. But even versus last week, which was an abbreviated week, volume is low, very, very low. So when you see a press towards resistance, you need to expect that any little thing is going to tip the market over. So here you have a lower high, a lower closing high, again, 4-hour chart, and then a break below this bar here, which marked a lower low. This was the signal that something was going on. So now we are in a trading range. The question is now, do we rally back above 2780 or do we break down below? Let's use the lows of yesterday, which was at 2765.75. If we close down below 2765 on a 4-hour basis, 30-minute basis, whatever, it's not going to be good. It's going to be a rough morning for the markets. So keep an eye on these levels. Now the Nikkei is under a lot of pressure this morning. They were down at 1.5% earlier. They're now down only 1.44%. We had a dead cat bounce. I think that this rally is doomed to fail. I think we're breaking down to lower lows on the Nikkei. And this is a very similar chart to what we saw on the S&P 500. Here's our lower low and our breakdown below support. And this is what we're looking for on the S&P 500. I'm not saying it's going to happen, but it will certainly influence our decision of as to whether or not we add to our short positions. We added more yesterday to our short positions. Members will talk about those positions in a moment. The Nasdaq futures. Here's our lower high again. And we'll go with an extreme, right? Here is a breakdown below prior support. And this is the low of the 9th, not the 10th, but the 9th. And we broke down below that level. It is now acting as resistance. So, again, we're looking for either a rally through to recapture or a continuation breakdown below this low here, which we tested overnight, 9 p.m. Eastern Standard Time last night. Do we break it? If we do, we're going a lot lower. We will probably challenge this prior support level, which opened up here on the 6th. We will retrace this entire move. And one might argue that we could have a head and shoulders setup here, left shoulder, head, right shoulder forming, and here is our neckline. So That's a good argument. Do you trade off of this right now simply because you've identified a head and shoulders setup? Possibly. No, you don't do anything. You wait and see whether or not we take out lows, and then you act accordingly. Let's take a look at the dollar. The dollar is looking strong. Now, you had a rally back on some commodities yesterday, in particular gold and the gold miners, as the dollar pulled back. So what we're looking for here is a signal that this series of lower highs and lower lows is now over. To do that, we need to break out above, let's call it 95.53. We need to close above that level, and we could say, okay, in all probability, you're going to see a perceived, quote, in air quotes, a perceived flight to safety into the US dollar. And that will not be good for commodities. Unless, of course, the global markets perceive these trade wars as a geopolitical event. And they may. They believe that Brexit was a geopolitical event. During that time frame, when you led up to the Brexit vote, you had gold, silver, the US dollar, all rallying in tandem. So it can happen. It must be the consensus of the global community, though, that we have a geopolitical event. We're not there yet. Because when you take a look at gold, gold is down this morning. The however here is that gold is holding on to support. Now, it is threatening that support level, no doubt about it. One would argue, and I have a long exposure to the gold miners, so I want to see gold rally. So I'm not talking my book here. Actually, I'm doing the inverse. We have a possible head and shoulders setup. Left shoulder, head, right shoulder. Here's that neckline again. So I would be worried about gold if we close down below, let's call it 1249 on the price of gold. Natural gas, which has had a very, very weak couple of weeks, is now catching a bit of a bid. We have the Nat Gas inventories report coming out tomorrow. I don't believe they had an inventories report last week. So we're going to get our first report in 2 weeks tomorrow. That could be a market mover. Would I buy here? I'm not seeing any reason to. We are leaning into, or approaching anyway, a resistance level, of which over the past several days, since it's hit that resistance level, it's failed. It's rolled over and made new lower lows. So that's not a good thing. The trend is clearly down in the short term. I would wait for a breakout or a capitulation sell-off. The VIX. Now the VIX is spiking this morning. I'm going to go over a daily chart with members. It was implying yesterday at the close that it had found a bottom. I think that if I had to hazard a guess here, I think that we are at the beginning of seeing a lower high on the S&P 500, therefore the stock market, in all probability, the Russell 2000, which closed down yesterday as well, in the short term anyway. We are heading into earnings season. Do they try to play games and try to spike the markets higher? Probably. They always do. Will the companies out there who do not meet expectations, or even those who meet expectations, will they use the tariffs as a reason why they will guide down in the future? Probably. I would. Why not? So they may use the occasion to say, you know what, the impact of tariffs may impact our business. That'll be their out if they fail to meet earnings guidance for the next quarter. So the VIX popping this morning, a sign of fear. Now, Bitcoin did have a breakout point failure. It broke out above resistance and then rolled over. It is now consolidating. With the events that are going on here, with the tariffs, with the fact that the Nikkei is rolling over, with the fact that the yield curve over in Japan is beginning to narrow now steeply as well. It hasn't inverted since 1991, but it is narrowing and narrowing quickly. And speaking of that, let's get over to a chart of the yield curve. I've been talking about this. The last time I spoke about it, it hit a new multi-year low. Guess what? A new multi-year low on the yield curve monthly chart going back to 1989, 1990. And you can see that we're probably still down around those August 2007 levels. Yeah, August 2007. So the yield curve here in the States is flattening very, very quickly. What do we do here? Nothing. There's nothing to do, right? You could take a look at the overlay here in blue of the S&P 500, and if you would have shorted at these levels back then, you would have gotten your head ripped off. So I'm not saying by any stretch of the imagination go running in today and shorting the market based upon this observation, perhaps due to other reasons, technical reasons in the market, but certainly not the yield curve yet. When do you want to begin to short the market or look to short the market? When you have an inversion of the yield curve, meaning when the 2-year Treasury yield is higher than the 10-year Treasury yield. We're not there yet. It's just a watch. I will point out, though, on this blue line again, which is the S&P 500 monthly chart, note possible double top. What did you see at or around every time the yield curve flattened? A double top. Right here, right here, right here. Right? Isn't it curious? So let's pay attention to the chart patterns that are setting up here from a very, very high level view. For those of you out there that are day traders, you know what? The monthly charts matter to you as well, right? You need to pay attention where we are in the market cycle. This is a monthly chart. So let's pay attention. Let's understand the dynamic of what is going on here. And that is we are seeing the flattening of the yield curve. And in fact, I believe it was the global yield curve had inverted. I believe that was last week. So a lot of problems out there. Let's pay attention to it. Let's respect it. And let's move on to member stock chart requests. I don't have many today. RPD, Rapid7 Inc, daily chart. We're putting in lower highs here. We are bouncing back. I can't buy this stock until we get through the at least the $30 per share level. At least that'll take us above this upper band of resistance. What would make me happy, though, and want me to add to my position is on a rally and a close above this resistance level here at the 31.44 level. But at current, take a look at your RSI making lower highs and lower lows. Stokes, they're hooking back up, but they're threatening to roll back over again. Lower highs and ultimate oscillator. Until we get above 30, I wouldn't be a buyer. If you bought the shares today, okay, scratch the itch, fine. Keep your buys small and use a stop right below. I would use the 2860 level, which marked the lows of July the 5th, okay? Because we rallied off of that level, took us back above resistance. If that support level fails, you're going to want to be out. The next chart up, Cimarex Energy. Energy's been behaving well. We are in a tightening triangle formation, but we're not above it yet. We're not above this upper band of resistance. So I wouldn't buy the shares until we get and close above this resistance level at, let's call it the 103, and ideally the 103.91 level, because that marks the prior high going back to June the 29th. That would be interesting for us to get above that level. Now you have RSI rising, good stuff. It broke out. Stokes are rising, good stuff. Volume, though. I mean, there's no volume, right? We need to respect the volume. And this is what you're seeing all over the market. It's not just this company here. It's the market in general. And again, sure, summer doldrums, okay. But remember, when it comes to the markets anyway, we're close to all-time highs. That argument does not float when you try to take me out to new all-time highs, yet volume is non-existent. Please, no good. APC, Anadarko Petroleum. I like the chart here. We attempted to break out yesterday, but we failed. We did break out on RSI. And we're beginning to break out on Stokes. So we have an indicator that is leading price performance. Volume has been okay. I mean, yesterday came in light, but relative to the market, better than the market. The prior day being Monday, it was very strong. So the chart is good. I've been talking about it with members, the fact that I like energy. We now own energy. We're going to look to add more to our energy position. So Anadarko looking good. We want to get a closing breakout though, right? Above resistance here at 75, let's call it 75.60 thereabouts, and ideally above yesterday's high. Let's clear that hurdle. Now, what we did see yesterday was a hollow filled candlestick, right? That was a sign of indecision. You don't want to see that at the top of a trading range because normally, well, not normally, many times you get a pullback. And that is it for this morning, folks. Members, let's segue over to a quick morning update, and I will get this out to you. Everybody have a profitable trading day. If you aren't a member, sign up for the 14-day free trial offer. Members, let's get to a quick strategy session for this morning. Okay, members, let's talk strategy this morning.